Thank you for your interest in learning about the Global Steward Managed Account. We hope you'll seriously consider this for a portion of your investment portfolio. Global Steward Advisors, LLC, is a fiduciary who provides a fee-based managed account service for investors. This service is known as the Global Steward Account, hereafter GSA. The long-term objective of the GSA is to grow portfolios at a rate faster than the S&P 500 index by using a proprietary blend of active investment management strategies, including but not limited to fundamental analysis, technical analysis, pattern recognition, and option writing. There is no guarantee Global Steward Advisors, LLC, will be successful in achieving this objective. Past performance is no guarantee of future results. Portfolios are subject to risk of loss, and investors should carefully review all disclosure documents and the investment advisory agreement prior to investing. The Global Steward Account utilizes a management process representing the culmination of more than 3 decades of investment experience by its developer and portfolio manager, Kenneth S. Ray. Ken resigned his position as Vice President Investments with a national brokerage firm in 1989 to pioneer the development of computerized investment analysis and artificial intelligence systems. These systems were first deployed in 1993 and received national recognition as one of the first artificial intelligence systems seeking to help the individual investor generate returns greater than the S&P 500 index. This approach was first offered as a managed account service known as MarketMinder and is discussed in the next video following this introduction.
Welcome back to World Business Review. On this segment, we're going to talk with a company that offers payroll processing and a great many other services via the internet. And we're also going to take a look at what's called an artificial intelligence program used to forecast short-term movements in the stock markets.
Recognizing that every management system has both strengths and weaknesses, Ken combined management techniques benefiting from his experience using artificial intelligence technologies with strengths he observed from other, more traditional methods of investment analysis. The result was a proprietary blend of active management techniques seeking to outperform the S&P 500 index. The final step was to overlay 7 principles of good stewardship to further guide the discipline of the proprietary GSA investment management process. These stewardship principles serve as a critical foundation for the present GSA strategy launched April 1st, 2016. GSA Good Stewardship Investment Principle Number 1, Seek to Outperform. GSA seeks superior performance compared to the S&P 500 index. The parable of the talents in Luke 19 contrasts the rewards of good stewardship with the consequences of neglect. Good stewardship requires intentional action and seeks superior performance. However, fewer than 8% of large cap money managers have actually delivered performance even equivalent to the S&P 500 index. This provides perspective regarding the performance of the GSA compared to other accounts. How many managers actually beat the market? Turns out that roughly 1 in 20 actively managed domestic funds beat the index funds. There was a study by MarketWatch indicating that beating the market turns out to be even harder than we thought. And that's saying something, since Everyone already knew it was incredibly difficult. According to a just-released research report from Standard & Poor's, the statistics we've all been using to assess the likelihood of beating the market are biased in favor of success. Correcting that bias is therefore crucial if we're going to base our investment strategies on an accurate assessment of the facts. The picture that emerged once S&P did that was sobering, to say the least. Over the last 15 years, 92.2% of large cap funds lagged a simple S&P 500 index fund. The percentages of mid cap and small cap funds lagging their benchmarks were even higher, 95.4% and 93.2% respectively. GSA Good Stewardship Investment Principle number 2, manage actively. Actively manage the assets under one's responsibility. We believe good stewardship requires paying attention or at least hiring someone who does. We believe the buy and hold strategy promoted to many investors is not sufficient to qualify as good stewardship. Too often, buy and hold resembles falling asleep at the wheel, and we have seen investors suffer mediocre or poor performance. GSA Good Stewardship Investment Principle number 3, identify what to buy and sell. This means strategically selecting what investments to buy and sell. The GSA searches global markets to identify a small handful of investments that we believe to have above average growth potential. This list is further screened for ethical criteria, thereby seeking investments we believe to be beneficial to mankind and avoiding those which are problematic. GSA Good Stewardship Investment Principle number 4, identify when to buy and sell. Most advisors have not demonstrated an ability to exceed performance of the S&P 500 index by carefully timing their entry and exit from investments. So they simply buy and hold and presume such timing cannot be done. The passive buy and hold approach is not sufficient to meet our perspective of optimal stewardship when managing GSAs. GSA management seeks to enhance returns through strategic timing of buy and sell points. We have found that artificial intelligence can be a helpful tool to strategically identify buy and sell points. GSA Good Stewardship Investment Principle number 5, diversify strategically. Strategically diversifying into a manageable quantity of assets allows us to concentrate on areas of the market where we anticipate the greatest growth over time. This focused approach at least creates the possibility for superior performance. The GSA approach differs from other managers who use excessive diversification to reduce risk, but then also reduce returns. GSA Good Stewardship Investment Principle number 6, earn income from options. We feel it is important to demonstrate the value of our management every month. One way we often reduce risk and enhance returns is through covered option writing. This strategy allows us to generate income to your portfolio, but may somewhat limit gains. The monthly income we generate through option writing can add significantly to portfolio returns and normally exceeds the amount of our management fee. We see many opportunities to earn substantial monthly income from option writing. This is one recent example. GSA Good Stewardship Investment Principle number 7, limit investment size. We limit the aggregate investment of our GSAs into any one security. This becomes particularly important when writing options or investing into a security that is considered mid-cap or smaller. Strategic purchases or sales of securities sometimes require an ability to perform transactions at a certain price without substantially impacting the market. The ability to trade with greater precision is one advantage that individual investors have over larger or institutional investors. One simple metaphor to understand the benefits of smaller size investment is to imagine how a small speedboat can quickly respond to changing conditions compared to a large ship which can only respond slowly over time to change direction. When market risks or opportunities change quickly, we are able to respond quickly. If you do not yet have a GSA, then we encourage you to carefully consider opening a GSA for at least a portion of your investment. GSA accounts are most effective for accounts ranging from $100,000 to $1 million. Compare our performance to the performance of your existing advisor. Contrast our actively managed good stewardship approach to the passive strategies you've read or heard about from other advisors. And, of course, please contact us by phone, email, or by scheduling a personal Zoom call if we may be of service or answer further questions.